Today, we're looking at 3 trades that changed history and the exact numbers behind the madness. First, Paul Tudor Jones, October 19th, 1987. The Dow Jones plummeted 22% in a single day, the biggest crash in history. While the world panicked, Paul Tudor Jones was short. He didn't guess. He analyzed the 1929 crash, mapped the Elliott wave theory, and knew the bubble was ready to pop. In that single day, his fund gained 200%. He walked away with a $100 million payday, at a time when $100 million was enough to buy anything on the planet. Second, Michael Burry. 2005, Michael Burry saw what everyone ignored. Subprime mortgage bonds were built to fail. He bought credit default swaps against bonds worth hundreds of millions. For 2 years, he paid insurance premiums while his investors revolted, demanding he close the position. He stayed. When the market finally collapsed in 2008, Scion Capital delivered a 489% return for investors. Burry personally cleared $100 million in profit, while his firm made $700 million total. He didn't just survive the crash, he mathematically guaranteed his win. Finally, Ole Andreas Halvorsen, the modern titan. He runs Viking Global, managing over $50 billion. Recently, he dumped his massive stakes in tech giants like Nvidia and Amazon, taking his profits before the top. And where did he put the money? He opened a massive $1.2 billion position in Microsoft. He doesn't hold assets to look good. He moves billions when the data shifts. In just 3 months, his fund generated $45 billion in net cash flow. This is institutional level trading. It's not about the next big coin. It's about massive, calculated billion-dollar allocations. These 3 men have nothing in common except for one thing: discipline. They didn't trade on gut feeling. They traded on data. Tudor Jones had the crash patterns. Burry had the mortgage default math. Halvorsen has the institutional data. Most people lose because they trade their emotions.